Hey everyone, welcome back to the TraderLion podcast. I'm your host, Richard Moglen. Joining us today is a very special friend of mine, Ben Bennett, the founder of patternprofits.net, and he is a position trader and swing trader with over 23 years of experience in the markets and someone who I've learned a ton from personally. And he's also known throughout Twitter as somebody who lends a helping hand to new traders. So Ben, first of all, thanks so much for taking the time to speak with me today, and welcome.
Thank you, Richard. Great to join you again.
Perfect.
It's been a while since we did our original one.
It has been. It has
Very
been
nice
sure.
to be here.
Awesome. And and it's great also to be partnering up with you. For people who don't know, we're doing a webinar series with Ben covering a few kind of very important concepts when it comes to trading, scanning for kind of building out that universalist, and also focusing on short-term trading patterns to make the most of those setups. So if you haven't checked that out, there'll be a link popping up right now, as well as a link down below in the description. And Ben, it's really great to be working with you and learning from you on a one-on-one basis and kind of creating that series with you.
Yeah, it's been great. And I love being able to kind of dig in a little deeper to the details and dig in more to the process and kind of how I go about things. So yeah, it's been great. Feedback's been wonderful, and I enjoy sharing it.
Absolutely. And hopefully we're answering some of the common questions that I know you get asked on a day-to-day basis on Twitter, and really answering those thoroughly. So that's great as well. And Ben, just kind of getting into the podcast, I'd love to talk a little bit about kind of how you got started and also kind of early lessons you experienced as a trader, because I know when we're starting out, we often make a lot of the same mistakes over and over again. So run me through kind of your background, how you first got interested in the markets. And I'd love to hear some stories as well, maybe some big losses that taught you some important lessons.
Sure. It was my college roommate that got me started back in the late 90s. And you really just had to buy, it was during the dot-com bubble, and just about anything you bought regularly was going up 10, 20, even 30% in a day. And it was very consistent. It was day after day after day, week after week. It was like that. And that was my first introduction. And I thought, this is, fantastic. This is wonderful. Maybe kind of compared to NFTs now, where
Right.
it seems like you get involved and you buy something, and a couple of weeks later you sell it for a huge profit. And a lot of these, it's new. A lot of people don't even know what they're doing, but it was similar to that, where the gains were just quick and they were substantial. And then March 2000 came along, and we realized we weren't brilliant. It was the market, that was taking these stocks higher, and we gave back a lot of money. And that was the period when you realize that if you're going to take it seriously and you're going to approach this, as a career, you're going to need to do some research and learn what you're doing. And that's when I kind of really decided that, I need to dig in. I need to learn about the market and how it all works and the structure to it, and can't just blindly buy what, a friend tells me is about to go up. So that was the first big lesson, is that basically easy come, easy go. And that really helped to, kind of structure me, though, going forward. I think that was also my first early lesson, that the market as a whole is number one.
Yeah.
Because 3 out of 4 stocks are going to move with the general market. So it was easy when the market was going up every day, every week, every month, compared to when that dynamic changed and the market was headed lower. Yeah, it got a little bit tougher to make money. Like I said, with that same approach, you start giving it all back, and the market takes it a lot quicker than it gives it to you as well.
Absolutely.
So learn some of those lessons, giving back gains, learn those. And I would say that by nature, I'm a positive person, and that can really work against you in the market if you let it. If you're just out there pressing because that's your personality and the market's, turned and now moving against you, yeah, you can lose money very fast.
Absolutely.
But those early lessons, I still take them with me today.
Yeah. And there's that O'Neill stat that 3 out of 4 stocks follow the trend of the market. So I completely agree with you. When the market is correcting or in an uptrend, most stocks are going to follow it. And we're seeing that a little bit now. I think probably newer traders who started in 2020, 2021, there's their first kind of meaningful drop that they've maybe experienced. And they're probably learning some tough lessons about risk management, stuff that you went through obviously in the 2000s and that type of thing. And I'd love to bring it back to those first few market cycles that you experienced and see if there's any stocks or stories that stand out to you that were like really important learning moments and kind of convince you to make a new rule or change your style in some way or just seek out more knowledge about trading.
Well, I think it kind of leads you to developing a system
Right.
rather than just kind of randomly coming in and out of these stocks and different names. And I think it's very difficult in the beginning when you don't have a system to find kind of your rhythm, match up your time frame to your personality, and then find a process that you can repeat. Because we got lucky in the beginning. The timing was great and the market took us higher, but try to repeat that, when the market's not cooperating and you can't. So basically finding your system, making sure it meshes with your personality. Time frame is very important. Some people are going to be better off as position traders and swing traders because that matches their personality. Whereas a lot of times those, type A personalities, maybe are better off day trading and being 100% in cash, especially now that, things are trading and moving significantly around the clock. I learned that lesson the hard way. I tried to trade futures, and that's the whole reason I don't trade crypto now, is that I learned, as I got older, I have family, I can't be up all hours of the night watching them trade, 24 hours. I have responsibilities, and want to be with the family and the kids the next day. So those are all lessons, that you kind of learn through time. But going back, to those original cycles, trying to incorporate in something that not only works and fits you, but that you can repeat, that you can do year after year, and let that kind of, let the market guide you, and then take those experiences and apply them. That only comes with time. And, as we say, you got to have that screen time, to build those traits. And it does get easier as time goes by and you see multiple cycles, but I would never say it's easy. And we're kind of getting another taste of that and reminder right now.
Absolutely. And for a little bit of context, we're recording this on Thursday. We're still in a downtrend as this moment. Hopefully the market's bottom by the time this is out, but we'll have to see. And Ben, I'm sure we touched on this before, and I probably asked you this question before, but what books, going back to kind of building a structure and building a strategy to start out with, what books would you recommend new traders start out with that you kind of think provide that comprehensive look at the market and provide a good kind of starting foundation to build off of and kind of develop your own methodology?
Yeah, my first real overview introduction of the market was William O'Neill's How to Make Money in Stocks. That was the one that really helped guide me on what it was all about and the general patterns, double bottoms, cup with handle, and the whole CAN SLIM acronym, and using that to guide me on some of the fundamentals. Just a great overview starting point for how the market works and how, I want to approach it and when to be involved and when to, step aside. All of that is contained within that. And I think pretty much everything I do is built on that foundation. That was the original foundation, that everything that came later, built off of that. And I think as time goes on, we all tend to find our own way, but it's hard to do if you don't have, that foundation to build on. So William O'Neill's How to Make Money in Stocks. And then I would say Stan Weinstein's book was probably a close second.
There we
Secrets
go. Reading it right
for
here.
Profiting. That's the one.
Yep.
Secrets for Profiting in Bull and Bear Markets. And that it's even though it's kind of similar as far as some of the patterns and that type of stuff, it gives you a different perspective, and it does kind of help tie it all together. So I think those two books were a good introduction as far as when to be in the market, when to pull back, and when you want to step aside. And I think they both provide a great foundation. Obviously, Mark Minervini's books too, a good solid foundation, and he's incredible. Just won the USIC again last year. Just amazing. And those books, again, providing a solid foundation and kind of building off of off of William O'Neill and Weinstein's books. As I got further along into who I was as a trader and knew that I wanted to be a little bit faster as far as my swing trading and kind of update on that, Brian Shannon's book was a huge eye opener. Brian Shannon, Alpha Trends, his technical analysis, multiple time frames. That was one of those books that really dove into the shorter term, time frames, because with William O'Neill and Weinstein, we're not talking about 30-minute charts and tying that in. So that was a great book to really complement again, what I had learned in the other books, and then tying it together on the shorter time frames and being able to swing. And obviously you see my charts on Twitter. I've got anchored VWAPs, attached to places. So Brian has had a huge influence on my trading. Psychology, Mark Douglas. I gotta include that one. Trading in the Zone by Mark Douglas. I think that was the one that first really opened my eyes to the psychology behind it, that at any point anything can happen, and just a great overview of keeping you in the right mindset in the market. And then I'd say one more, probably the life cycle trade, a newer kind of more up-to-date version of William O'Neill's and more focused on IPOs. That was Eve Bobak, Kathy Donnelly, and friends. That book was excellent. It kind of took a lot of the patterns and terms that we knew and kind of gave it a new vocabulary and a new spin on the stuff we already knew. But then the details, when you could focus it on just the IPOs, how they act, what their tendencies are, and tying that in, just another fantastic read. So that pretty much sums it up as far as the ones that have really influenced me as a trader.
Absolutely, yeah, and I think that's a fantastic list for new traders to work off of. And I wanted to ask you, being somebody who's on Twitter trying to help out newer traders, and also the author of your newsletter, of course, which will be linked down below, what are some common questions that you see newer traders asking over and over, and what do you see that are common problems that a lot of new traders experience in their first few years as a trader?
I think first, just kind of getting used to everybody else's time frame and kind of tying that together with theirs. A lot of times we have these Twitter fights where it's just a difference in time frame. One person is a longer term trader and one person is a shorter term trader, and they're looking at the same chart and coming to different conclusions, but don't realize they're on completely different time frames. I think in the beginning, that's one that, you really have to, with experience, and you figure yourself out, and then you can kind of figure out others. But as a new trader, you're bullish on something and you see somebody's bearish on something, and you just immediately think in your own, you're thinking in your own time frame. And that's what's on your mind. And they could be thinking, they're looking 6 months or 6 years out, and you're thinking tomorrow. So the butting of the heads there. And I see that a lot, especially, with newer traders. Time frame is one of the biggest things, especially now that everybody in all different time frames, we're all kind of in one spot sharing ideas on FinTwit. So I think, a lot of newer traders kind of have to really narrow down their list in the beginning, so as not to get confused. And you certainly don't want to be blindly following, entries and exits. But even when you're trying to learn, if you're following somebody or paying close attention to someone who's not on the same time frame as you, it can be very confusing. And I do see that often, and I get questions a lot of times, in that regard, where there's just a difference in time frame.
Absolutely. And one thing you're known for is the list that you put out on Twitter every day and every weekend. And I think they're an excellent source of ideas that to trade off of. It's one of my favorite questions to ask about daily and weekend routines. So first, talking about your weekend routine, I love for you to kind of walk us through your process. How do you go from market analysis to idea identification? How do you analyze your current positions if you have any? And yeah, just kind of putting everything together. How do you set yourself up for success the coming week?
Sure. So the weekend analysis is going to start with going through my scans, really kind of digging deep into group strength. First, I've got to determine the market, and right now it's not difficult at all. We know that it's not healthy. But then looking at what groups are standing out, where's the relative strength, which individual names within those groups are holding up well. So I really want that to kind of jump out at me. I don't want to have to really dig in and search for it. If I do, that's just another sign that the market's not ready, and continue to have patience, wait for a better market. But when things are really good, we talked about this in the webinar back September, October, oil and gas were jumping off the page. Not really my, specialty. But then come November, December, semiconductors were really jumping out, and that's, right in my wheelhouse. So when I see those on my list starting to populate the top of my screens, that kind of gives me an idea that, okay, the market's getting healthier again. At least we have a leading group. Then I can start digging into the names within those groups. I organize those by relative strength, and then I have several screens to kind of help guide me with earnings growth, revenue growth. I can then dig into those individual numbers, make sure that there's acceleration. Are they selling more? If they're selling more, are they making more? I can really dig into those individual companies. Then I can go to the charts and see, okay, where is it actionable? Try to get down to a handful of names that going into the next week are at spots, and they might not be actionable, immediately on Monday when the bell rings, but I at least have some ideas. I've set some alerts to tell me as they come through pivots or reclaim moving averages. So I have all of that work done over the weekend. I usually share a video on YouTube as well on the weekend of some ideas that I'm watching. And then as they come through and I get the alerts, I'm already ready to participate. That point, it's just a matter of how's the overall market look? Do I want to get involved? How much exposure, do I already have on? Am I willing to take on more? Do I want to take on more? A lot of times those questions have been answered, before the bell rings as well. So then it's just about executing. And I usually will have a handful of names for bigger picture, that I'm thinking more position trading on. And then I'll also have a few names that I'm thinking day trade. And if it works and I make some progress, maybe swing them, but usually keep those separate. But all of those ideas are generated from the same screens, and that group that I find, maybe it's semiconductors or now it's energy. There was a time when retail and leisure and those things were participating too. Whether I'm position trading or swing trading or day trading, they all tend to come from, whichever groups are showing me relative strength and leading. So it was great when semiconductors, were really acting well and healthy and breaking out or coming up the right side of the bases. I was able to participate in those, in all time frames. And that's really how I prefer to trade. And then as far as, that's kind of the weekend routine preparing me for the week. As far as the daily routine now, that's changed significantly because having the newsletter and kind of sharing my daily process. That's something for me that, I do on my own and kind of on my own time. And now I'm kind of on a schedule with doing it. I did find that it does keep me, really, really focused, especially since I am sharing those ideas as they come from the screens daily. I'm looking at, not only those big picture ideas that I found over the weekend, but I'm digging in deeper, to reversals and inside outside days and pocket pivots. And, I'm really digging in to the technical aspects of that to see, and build a list for the next day. So that routine, it's not too unsimilar as far as what I do on the weekend versus what I do daily. But I would say on the weekend is much more bigger picture and building, the watch list out. Whereas during the week, it's much more specific and technical to specific entries and exits.
Perfect. And I often get the question, and I'm sure you do as well, when you have an idea and you've got a clear pivot point that you're looking to act upon, will you act upon that idea whenever it occurs during the day, the trading day, even 5 minutes after the bell, 1 minute after the bell? Or do you like to wait 30 minutes, 45 minutes to let the market maybe settle down a bit, kind of determine that trend for the day? I'd love to hear your thoughts on that and kind of your process and how you deal with that.
Yeah, I try to avoid the first 20 minutes if I can. Now there may be something that I know has a history of really moving quickly. And a lot of times, if that's the case, I'll have a specific level and maybe put in a buy stop limit and let the market decide if it's going to put me in, in the first 5 or 10 minutes. But ideally, I'm not involved in that because there's so many whipsaws in that first, 20 minutes or so. I much prefer coming in, 30 minutes in, letting something establish a range and then take it as it comes out of that early range. That's my preferred entry. Now, the market doesn't always allow for that. So there are times, especially if I've seen something really consolidate, inside day or even double inside, where I have a very specific level where I say, okay, if it comes through there, it's not only going to reclaim a moving average or a VWAP, but it's also going to take out a descending trend line. It's also got to pivot just above. If all of those things are lining up to one spot, then I may have to take a different approach, especially if it's something that I know can really move, 5, 6, 7, 8% or more in a day. Then I may have to take that chance. Maybe I take a little smaller size initially, let the market put me in, and then quickly add to it if it's moving in my favor. But I definitely prefer to come in later, after that first 30 minutes has established a range. But like I said, it doesn't always, work out that way. And the more things we talk about confluence, the more things that line up to one spot, if it's been resistance many times, and then all of a sudden the market's healthy and we're coming through there. And what I won't do is buy something that's gapping up over it, 4%, 5%. That I have a different approach for that. But if it's coming through that trend line and it's earlier, inside day, double inside, coming out, I may get involved a little earlier than I want to, just smaller position size and quick to add to it after kind of that first reaction.
Perfect. And during a correction, do you have any other tweaks to your weekend or daily routines or just additional screens that you run to try to identify the stocks kind of bucking the overall downtrend and showing that relative strength?
I do that more during the week. I'll run a down day relative strength scan. Mm-hmm. So whatever's acting healthy and doing the opposite of what the market's doing is going to stand out to me, especially with when we're in a sea of red, where, everything's red, all groups are red, what individual stocks may be bucking that trend or closing high up in their range, even if they are red. I want to know what those are. I want to look at the groups too and know which ones within there are standing out. A lot of times that will help guide me to when the market is ready to a new leader or a group that may lead, when the market does get healthy. So it is something that I definitely want to keep an eye on and be aware of.
Perfect. And what are some things on this down day relative strength screen that you're really looking for? What are the kind of parameters that you use?
So I like to see the stock either slightly green or it could be down maybe 1%, but it needs to be closing high up in the range. So if there's a stock that's, traded between 100 and 110 on the day, I like to see 75% or better of the range. So I want to see it closing 107.50, 108, 109 or better,
Right.
if the low of the day was 100. So it's kind of very specific in what I'm looking for. At the same time, I have some parameters in there to keep composite rating, relative strength rating, to keep things that maybe have been in downtrends and are squeezing off the bottom, or maybe a biotech had news, something like that. I'm going to avoid those. These are still, strong stocks that are in uptrends or maybe above the 50-day or the 200-day. We work those filters in so that I'm not, and I'll have limits on both price and volume to make sure I'm not getting, low institutional quality stuff off of the bottom.
Right.
So really trying to focus on the more liquid leaders, and kind of guides me not only to those individual stocks, but those groups that may be bucking the trend. Today was a horrible day, but as I went through, I saw some, travel names, some leisure. It's not growth, it's the value stuff that's still outperforming, but that kind of stands out to me. Oil and gas, shippers,
Right.
those low PE, names that are holding up well where growth is not. If I didn't build that in, I wouldn't really be able to see that without really kind of scanning the whole market. So this really helps me narrow down the focus.
Perfect. And it'll be really interesting to see what groups end up leading coming out of this correction, because there will be another uptrend, even though it might seem like everything is going down every single day. There will be another uptrend. We have to stay optimistic. And Ben, I'd love to just kind of hear your thoughts and maybe words of encouragement for any traders out there who are new. This is their first kind of meaningful correction. It's been a tough start to this year, 2022. What kind of general advice and kind of optimism would you share to keep them inspired and ready and staying focused for that next big move, the next uptrend?
Yeah, to stay focused, start building your watch list now. Start looking for stocks that are standing out, groups that are standing out. Look for that relative strength. Be patient. Don't be in a hurry to jump back in. That's probably, the biggest issue with new traders is that they're ready every
Right.
day to get involved. And the hardest thing is that sit out power to just pull back, wait. If you do read William O'Neill's How to Make Money in Stocks, we have a very specific criteria that we're looking for with a follow through day. And that doesn't come with the exact bottom. It comes at least 4 days or more later. So that kind of allows you to be patient, wait, let the process play out. But for newer traders, I know that that's difficult, especially when you have stocks that you liked 50%, 60%, 70% higher a few months ago, and you see them cut in half or more, and you want to jump back in. But that's not the way, because 50% turns into 60 and 70%,
Right.
down as we're seeing now. So yeah, it can be very, very difficult to just step back. I would strongly suggest other hobbies, whether it's working out or fishing, yoga, whatever it may be. Find other hobbies to take you away from the screens, because it's a lot harder to be patient if you're sitting right in front of the screens, right in front of the monitors every day. You're probably going to want to get involved. And it's a lot easier if you have some other, activities that can steer your mind and take you away from the screens, away from the market. I promise you, when it comes, you'll know, and you're not going to miss anything,
Right.
because those bull markets tend to last a lot longer, and even the rallies tend to last a lot longer than the bear markets. So just having the patience, and you want to not only have your capital intact and ready to put to work when the time does come, but mentally be prepared, for that. Like you said, staying positive, a big part of that too. I know when it's been several months now, we've been since November that we've been headed lower. but it will happen. At some point, we're going to get a bottom, we're going to get a follow through day, and there's going to be a new rally. And at that point, the wind is going to be in our sails, and that's when you want to participate. So you've got to get there with the financial capital intact and ready, to participate mentally.
Absolutely. And I really liked what you said back there. If you're sitting in front of the screens every day, you're going to convince yourself that there is a setup and you're going to want to get involved, but really it's best to work on other things, do some hobbies like you said, watch the Miami Dolphins, go golfing, whatever you really enjoy, get away from the screens, enjoy your time. And also you can kind of put your time to good use, study up, read the books that Ben, you mentioned previously, study a setup, improve your scanning methodology. There's so many different things that you can do that would spend your time a lot better than forcing trades. Just having those little paper cuts, even if you are managing risk, getting stopped out a bunch, and also protecting your mental capital as well, as you kind of were alluding to. So thank you, Ben. I think you provide some great advice there. And kind of any last thoughts to anybody watching this video?
Now is the time to prepare.
Right.
We are, in that probably one of the, I would definitely say, other than COVID, this is one of the biggest declines that we've seen in growth stocks. I think the numbers are like 50% drop 80% and 80% drop 50%. That's one of Mark Minervini's quotes. And we're seeing that play out in real time, right now. But this too, it will pass. But you've got to remain patient. You've got to wait and let it play out. Obviously, we don't have the Fed behind our back like we did before, but there will be rallies even within a bear market that will be tradable. And we haven't seen that yet. It's been pretty steady declines in growth stocks, but it will come. And now's the time to study. If you're a newer trader, like Richard said, read the books. Now's the time to really dig in. You have a ton of great content that can help people on YouTube. TraderLion does a fantastic job as well. So yeah, now is the time to really dig in, learn those concepts, and then be ready, because it will happen every day. You still want to have your process and your routine, because those habits that you build right now, when the market is not cooperating, will really help you out down the road when you are in a healthy uptrend and the stocks that you want to participate in, especially growth, are all participating. So you want to be prepared for that when it does come. And I'll tell you this too, it can happen quickly and it can happen when you least expect it. Right. And it often does. When things look the absolute worst, when you go on FinTwit and you definitely feel like it's the end of the world, usually that's when we're getting close.
Absolutely. And that's why having a set of rules like the fall through day, looking for that kind of, no matter what the noise is saying in the media, on Twitter, you kind of see the start of the uptrend, you see the fall through day, and you're like, okay, there's a potential rally. Let's start to increase exposure. So yeah, look to add that structure here to your trading. I think that's very important. And with that, Ben, I think that's a great place to kind of wrap things up. Thank you again for your time. I'll have the links below to your Twitter, YouTube, website as well. But is there any other place that people can reach out to you if they have any questions about your style or anything like that?
Pattern Profits on Twitter, always a great place to reach out, ask questions. Check out the blog, patternprofits.net. A lot of the screens we discussed are there, some links there. So yeah, I'm always around and available.
Perfect. And like we mentioned earlier, we are doing a webinar series with Ben. The first one was focused on building that strong universe list of potential true market leaders. And the next one, which will be next weekend, will be focused more on kind of capitalizing on those opportunities, using kind of short-term momentum-based setups and kind of screening that focus list even more and finding those best technical setups. So go ahead and check that out in the description if you're interested in that. And with that, Ben, thanks so much for your time. And to everybody watching, I hope you enjoyed it as well. If you did, please go ahead and leave a like down below and subscribe if you're new to the TraderLion channel. And we'll see you guys in future videos. Thanks.